You're staring at a number, not a big number, $500 sitting in an account you just opened on a Tuesday night when you probably should have been asleep 2 hours ago. The cursor is hovering. The interface is clean, almost too clean, like it's waiting for you to do something you're not sure you're ready for. You don't know if this is the smartest thing you've ever done or the beginning of a very expensive lesson. Here's what no one tells you in that moment. That exact hesitation, that stillness before the first click, is the starting line for every serious investor who has ever existed. Every fund manager, every family office director, every name you'd recognize if I said it. They all sat exactly where you're sitting. What separated them from everyone else wasn't luck, and it wasn't talent. It was the level they reached next, and the one after that. This is a map of those levels, 8 of them, from $500 to $1 billion. Not as a fantasy, as a framework. Because understanding where this road goes, even from the very beginning, is one of the most valuable things you can do right now. Level 1. You have somewhere between $500 and $5,000, and you've just made your first investment. Maybe it's an index fund. Maybe it's a stock you recognize because you use the product. The decision feels significant because it is. But the psychology here is almost entirely emotional. A 5% drop in the market doesn't feel like numbers. It feels personal. That $500 is not abstract. It's a week of work or a month of saving, and watching it move down, even slightly, creates a kind of low-grade panic that no amount of reading prepared you for. Most people sell here not because they're wrong, but because no one taught them that discomfort is not a signal to exit. It's just the price of admission. Level 2. Capital somewhere between $5,000 and $50,000. This is where things start to get interesting, and also where the most common mistake lives. At this level, most investors start investing when the market feels safe. After a strong run, when the news is good, when confidence is high, and they stop when it doesn't. The cost of this behavior is enormous. Someone who invests $2,000 a month regardless of market conditions, dollar cost averaging, will outperform someone who tries to time their entry almost every time over a 10-year period. It's not complicated. It's just uncomfortable. And level 2, investors haven't yet built a system strong enough to override discomfort. Level 3, $50,000 to $250,000. Something shifts here. And it's not just the number. At this level, you've survived at least one real correction. You've watched your portfolio drop 10, maybe 15%, and you didn't sell. Not because you were fearless, because you had a plan and the plan held. That's the difference. Someone at level 2 sells during a correction. Someone at level 3 doesn't. Not because they're braver, but because they've built a system and they've tested it. They've also started to understand rebalancing. The deliberate act of selling what's grown and buying what's lagged to keep your allocation intact. It sounds mechanical. It is. That's precisely the point. Level 4. $250,000 to $1 million. Look, this is the level where the psychology completes its first major transformation. You stop asking, is the market going to be okay? And you start asking, what is my risk-adjusted return over the next decade? Those are not the same question. The first is about anxiety, the second is about architecture. At this level, a 1% move in the market is no longer abstract. It's $2,500 in a single day. And yet, it registers differently than it did at level 1. Not because you care less, but because you understand more. The math has become real in a way that actually calms you down, because you've seen it move before and you know what it means. If this is landing for you, stay with it, because level 5 is where the framework changes entirely, and most people never see it clearly enough to act on it. Level 5, $1 million to $5 million. This is the threshold. Before this point, you were playing defense, protecting what you had, growing it steadily, surviving volatility. Here, you start playing offense, not recklessly, deliberately. Investors at this level begin accessing things that simply aren't available below it. Private real estate funds, alternative assets, co-investment opportunities alongside institutional capital. The universe of options expands. But so does the complexity. A $5 million portfolio is not a $1 million portfolio times 5. It requires a different structure, different tax strategy, different thinking about liquidity. The investors who make it to level 6 are the ones who understood that at the moment they crossed this line, they needed new tools, not just more of the same ones. Level 6, $5 million to $25 million. The behavior marker here is delegation, safo, and doing it well. At this level, you are not managing everything yourself. You have advisors, tax counsel, possibly a small family office structure taking shape. What separates someone who stays at level 5 from someone who reaches level 6 is the ability to build a team around their capital without losing control of the strategy. That's harder than it sounds. Many people at this level delegate too much and lose sight of the framework. Others refuse to delegate at all and cap their own growth. The right posture is precise. You define the strategy, you hold the philosophy, and you let specialists execute within it. Rebalancing, tax loss harvesting, estate planning, these are no longer things you do yourself. They're things you oversee. Level 7, $25 million to $250 million. Here the math steps back. You're no longer primarily thinking in returns. You're thinking in structures, family offices, foundations, trusts that extend across generations. The decisions at this level are about time horizons most people never consider. Not a 10-year plan, a 50-year plan. And here's something worth sitting with. At this scale, the greatest risk is not market volatility, it's complexity. The more sophisticated the structure, the more places something can go quietly wrong. The investors who sustain wealth at this level are the ones who keep the core philosophy ruthlessly simple, even as the architecture around it grows more elaborate. They are not reacting to the market. They are positioning ahead of it, sometimes years in advance. Level 8, $1 billion and beyond. The math is almost irrelevant at this point. A 1% move is $10 million in a day. But that's not what this level is actually about. At this scale, an investor doesn't just participate in markets, they help shape them. A single allocation decision from a fund at this level can move the price of an asset. A conversation in the right room can determine whether a company gets the capital it needs to scale or doesn't. The decisions are not just financial, they are structural. They affect employment, infrastructure, entire industries. What does a decision look like here? It looks like a meeting where the agenda is not a stock pick. It's a thesis about where the global economy will be in 12 years and how to position $3 billion across 4 asset classes to be ready when it arrives. Remember that $500 on the screen at the beginning? By now, it barely registers as a unit of measurement. Not because it wasn't meaningful then. It was. It always is. But the scale of thinking has shifted so completely that the currency of this level isn't dollars. It's time, influence, and access. And the extraordinary thing is that the psychological seeds of level 8 are planted at level 1. The discipline not to sell when the market drops. The habit of building a system instead of reacting. The willingness to see the full picture, even when you're only at the beginning of it. Most people never move past level 2. Not because they lack capital, because they lack the framework. They invest when it feels good and stop when it doesn't. They never build the system that makes the next level possible. But you're here. You've seen the map, and wherever you are right now, level 1, level 3, level 5. The next level is not out of reach. It just requires you to think the way someone at that level thinks before you get there. Before we close this out, drop a comment and tell me which level you're at right now.